GTA 6 is finally, no, it's not out, it's postponed.
Are you serious right now, bro?
Once again, but we finally got a new trailer, and it's definitely time then to talk about Rockstar Games and its parental company, Take-Two. So that's why we're gonna look at the stock and see where we're gonna be heading from here onward, and why I personally believe that the current setup in this stock is a huge trap. Stay tuned, we're jumping right in. So we got a new trailer for GTA 6, finally at least something, while the game release is being postponed once again. And by the way, just as a side note, if you are yet not feeling old, I felt super old when I started Googling when the release of GTA 5 actually was. Because, brace yourself, GTA 5 was released back in September of 2013. And I am quite aware that it was a long time ago, but that long. Are you kidding me? So by the time when GTA 6 is gonna be coming out finally, we are talking about 13 years. 13 years of game development. What the flippin' fuck have they been doing for 13 years? Working on that game and trying to get it right. It kind of boggles my mind. In a time where AI is pumping out new innovations like every other day, it seems completely impossible for me to spend 13 years developing a successor game, right? So it's only a sequel to pre-existing games. It's not like they're completely inventing from scratch a new game that has never been seen before. We are living in uncertain times. New headlines every single day. Tariffs, trade wars, inflationary pressure, a black swan event out of nowhere. Many people feel unsettled and ask themselves, how can I protect my savings? What will happen to my investments if the markets really crash? At HKCM Global, we understand our community's concerns and we don't leave you to face them alone. Especially now, as the markets grow shaky, you need reliable guidance and a clear analysis to help you identify opportunities. That's why we're now offering a 20% discount in addition to already existing term-based discounts on all our products. This is an offer for everyone who doesn't want to act blindly in tough times, but rather make informed decisions. Whether it's crypto, precious metals, AI stocks, tech stocks, US equities, or European titles, you get 20% off all our analyses. Simply enter the code YourChance20 and get our insights at a special rate. That's YourChance20. Opportunities like this don't come twice, so act now and take control of your financial future. Anywho, back to the trailer. I don't know if you have seen the trailer yet. I would highly recommend you doing so. Looks amazing, looks great. I'm not a huge gaming person, but that trailer really looks great. Has this Miami vibe going on. Of course, it's not a real copy of Miami, but it's rather a fantasy city inspired by that Miami vibe. I'm loving it. I think it's amazing. But over here, we are no gaming channel. We are not here to show you gameplays and stuff. We're here for stock investing. So that's why, of course, we gotta talk about the development of the parental company of Rockstar Games. So Rockstar Games, obviously, you know that they're developing games like GTA. That's their most popular and most revenue driving franchise. But you cannot directly invest into Rockstar Games in and of themselves, but you can invest into their parental company, and their parental company is called Take-Two. And so to give you maybe a little bit of a better overview, a better understanding on what exactly Take-Two is doing and how this is all set up. So Take-Two is the parental company of, well, just a handful of companies really, so not difficult to memorize. It's mainly Rockstar Games and 2K, and that's almost it. I mean, here on the website they also have listed Sega. I don't know about them, but basically Rockstar Games and 2K, those are the big subsidiaries, and they also work with small independent publishers. So I reckon Sega is probably going to be one of those independent publishers that might have grown more important over recent years, but Rockstar Games and 2K, those are the two workhorses of the Take-Two company franchise. And since we already talked about Rockstar Games and GTA, and you've probably clicked on that video because of that very topic, let's also give you an overview on what 2K is doing. So 2K, you might maybe know them from their Mafia games, however, probably better known for the 2K sport games. So infamously obvious 2K NBA series, so 2K25, obviously the current one. And I remember actually back in the day, I had a very good friend of mine in school, and he was like completely hooked on NBA 2K07, I believe it was. Oh my goodness, how time is running. Right, okay, so those kind of sport games, WWE, PGA Tour, this is the kind of stuff that 2K is doing, so mostly focused on the sports world, but also their Mafia games. And these two together, 2K and also Rockstar Games, these are the two driving factors of the revenue that Take-Two is dealing with. And I would now like to jump with you together on the more overreaching time frame of our chart outlook first, and then we'll dive into the more imminent price action. Because what I find interesting here is, you remember we just looked it up, September 17th of 2013 was when GTA 5 finally came out. And if we look over to the stock, you can see that the stock has had great times back in the late 2000s. And what followed then was a rather choppy, uninteresting time in the stock. So how long was that? So starting here in 08 all the way up until 20, so roughly 5 years of no price action that is of any interest, just sideways movement, corrective action. And as soon as 2013 rolls around, fall of 2013, of course, obviously the stock market is always looking into the future. So that means the rally that is connected to GTA 5, of course, starts earlier than the release. In the stock market is always this expectation, this looking forward into the future. So starting from 2013, then, I don't know, maybe let's start from the beginning of 2013. So that's the time where you can really estimate that the driving factor was this whole hype around GTA 5 back then. Ever since then, we have seen an increase in stock price of almost 2,000% up until this current point. So a 20x in stock price. So that's about 1.5-fold increase every single year over the last 13 years. That really is good gains. I would not complain if I was an investor back then. And I don't think it's an over exaggeration to estimate that probably most of the driving factor of that rally in the stock has been due to the huge success of GTA 5. However, I mentioned in the intro that I believe it's probably gonna be a trap getting into the stock right now. And we do believe, based on our Elliott Wave theory and based on our outlook on the chart, that it's probably gonna be a bad time getting into the stock right now, even though we are in a very similar time frame as back in 2013 when everybody was looking up to the release of GTA 5. And that is because we as a company, we do not look at fundamentals, we do not look at market sentiment, but rather we look at Elliott Wave counts. And we like to do so because all that macro data, all that sentiment, all those news can really blur your vision for the bigger picture. And with Elliott Wave theory, we can really focus on the bigger picture because every single information that you really need to have about a stock is in its price action. The price of a stock is always an accumulation of every single information out there and every single market participant acting accordingly to the information that he has. So every single bit of information that can ever be held about a certain stock is always inwoven in the current price action. And currently what we do see that the stock of Take-Two has established an overreaching wave 1 top all the way back in December of 2020. And due to this count of an overreaching wave 1 top, what had to follow was a corrective action in over here, a wave A correction so far. And now what we see with the new all-time high, something that would usually get most investors real interested, we do conclude that this overreaching new all-time high is gonna be a corrective one. And we are now currently super close to the target zone. And this wave B target zone that we have established here is not a long target zone, but rather a short target zone. Meaning we do expect that here in this target zone, the course is probably gonna pivot and fall back down into corrective mode again. And so since we are very close now both to the target zone and also getting closer to the final release of GTA 6, this could also be a picture perfect example of a sell the news event, right? Everybody is hyped up about this new game, everybody is hyped up now, it's finally gonna be coming out, and then when it finally is out, maybe it falls short to expectations. Maybe some bugs or whatever, you name it. That would be the perfect moment for such a sell the news event to occur, when exactly the thing that everybody was waiting for finally occurs, and then when it occurs, it's a disappointment and the stock just comes crashing down. And that is precisely what we currently see in our primary scenario. So after this then corrective wave 2 top and this pivot point, we expect a final corrective wave C to come down and bring the stock back all the way in regions between, even maybe possibly all the way down to $46, but at least down to 107 and lower. Bottoming out probably at the most likely fib retracement of 61.8 at roughly $82. And then and only then will we see the final bottom here for TakeTwo stock and the wave 2 to finally be over, and after a wave 2 follows a bullish wave 3, which will then and only then take us finally to sustaining new all-time highs. But what is always important to consider is that we do not have a crystal ball. And that means with every scenario, we can never be 100% certain that it is gonna unfold, but we always usually deliver an alternative scenario as well. Here we have this alternative scenario, and in this alternative scenario that we currently mark with a 30% probability, obviously meaning that our primary scenario we currently have 70% confidence that it's gonna fold out exactly like we predict. And in this alternative scenario then with 30% probability, we could already have seen the wave 2 bottom in, and we could currently be in the ongoing development already of an overreaching wave 3. So what we see in our primary scenario to being established only here in this blue target zone could in our alternative scenario also already have occurred here back in October of 2022. This would, in the grand scheme of things, be a little short, a little small of a correction after such a long wave 1, but it would technically be possible. That's why we have it on the chart, but we do currently only have it at a 30% probability. And on the more imminent time frame then it becomes even more clear with our underlying wave count. You have here the very same target zones. You have here this target zone for the wave B top to occur somewhere between $241.50 and roughly $256. Only difference here is that on the imminent time frame we have also an imminent alternative scenario. So we not only have our overreaching long-term alternative scenario, but we also have for the more imminent price action also an imminent alternative scenario, which I, however, to be honest, regard as very, very unlikely. Because what we see here, we see the price action so far as in an A, B, C corrective move leading all the way up to this wave B top. And what we have on our alternative scenario is that if the course before entering into our target zone was to fall back below $135.62, then the probabilities would shift towards this alternative scenario where we would already directly establish this wave 2 low before even entering into this target zone. So as long as we stay above 135.62, and we are way above 135.62 currently, this alternative scenario is to be disregarded. Only should we fall below 135.62 before entering into this target zone here, then this alternative scenario would come into play. But since we are with current price action just a couple of percentage points short of that target zone here, and even better in the top, we've been, how far is that still from the top to a target zone? That's not even 2%. So since we are so close to this short target zone, I at this point would not regard this alternative scenario as a real possibility anymore. And as soon as we dip into this target zone here, this alternative scenario will then also be wiped off our charts. But so far, I have to give you what we see in the charts, and so far, technically, it would still be possible. That's why we still have it on. And if you also want to never miss such updates, and if you also want to get frequent updates, get push notifications on market entries, you get updates on every single markets that you like, you can go down to the description. There is a link taking you to our website. Once again, the reminder that we currently have a discount of 20% off every single analysis that we provide. So I highly recommend you checking that out. And up until then, see you in the next one. Take care. Bye-bye.